let me just briefly introduce Fred, and then we'll carry on with some of the questions and pick up on property with Arran again. So Fred is a global trading specialist with CMtrading. So we're very lucky to have him, especially with the markets being so exciting now, Fred, with all these all-time highs in the US. Are you finding that you're very busy at the moment?
Extremely busy.
And have we all missed the opportunities now, or do you think there's still some good opportunities to invest in the US?
You know, as this famous story says, you know, ultimately there's always opportunities, okay? There's never going to be a situation where you're going to miss out on everything, okay? It's just money is just being transformed from place to place. It's never not, it's always, you know, moving. It's not idle at any point. So the trick is just to move before the money moves, so that you get there before the money actually moves there. So, you know, the opportunities are abound, especially now. I see it across the board.
Great, and we're seeing a lot of news as well that this COVID-19 pandemic has spawned a whole generation of day traders, and we've all been sitting at home bored, and now we've started buying and selling stocks. Are you seeing a lot of demand still?
Yeah, absolutely. I mean, this is really the markets where everybody wants to get into. Okay, the volatility is there. Although the VIX has really, you know, subsided over the past, I would say, 3 months, ever since May. Nevertheless, there's still opportunities. I mean, the markets are still going up. And like I said, there's a rotation that is going on. First, it's the indices and the equity markets that were just exploding, and they're still exploding in the US. I mean, Apple is trading at $471. During the pandemic, it was selling at $220, and it's hitting new highs, together with the NASDAQ and carrying. And there's a rotation of stocks like we've spoken about before that just continue to go up. Now, you know, at the end of the day, we're all playing musical chairs here. And, you know, there's going to be a day where there's going to be a reckoning, and there's going to be a little bit of a correction in the markets. But going into where we are right now, the pandemic and to an election year, you have all the atmosphere of excitement and opportunities that I haven't seen in maybe 20 years. So
you're still seeing a lot of opportunities?
Oh, absolutely. Absolutely. Look at what gold has done in the past 3 weeks. I mean, unbelievable. Now, this is all, like you were saying, these are day traders that are aggravating the market even more so. And if you're aggravating the market, it's going to be more volatile. So the moves are much more extreme. And you're seeing that. And I think the central banks or the central economic Congress of each country is really just controlling the situation and making sure that the markets are not tanking. I mean, if you look at the JSE, the Johannesburg Stock Exchange, is trading at all-time highs. The NASDAQ is trading at all-time highs. The Dow Jones is close to its all-time highs. So, you know, we're trading on intervals that seems a little bit artificial to me. Nevertheless, the markets are still quite attentive to it, and there's volatility and there's participation, and that's all you need in order to make money and liquidity in the markets.
Thank you. So we've got a first question here from Ronald, and he wants to know, he's interested in trading foreign currency. What is your view on trading the Rand now, and how do you get started? So for somebody who's never traded in the Rand before.
So there's two questions there. There's one, how do you trade Forex? And two, how do you trade the Rand? Now, the Rand is I'm going to answer that first, and then we'll go to the first question. So the Rand is actually a very tricky currency to trade. Number one, because of what's going on in South Africa, a lot of indecision in the policies and the politics that has just plagued the country for over, I would say, over a decade and a half, to tell you the truth. And you've seen the Rand actually depreciate from 2011 to where it is right now, about 17 and a half. And you're getting that volatility, okay? You're definitely having that volatility, but the Rand is not consistent, okay? A lot of it has to do with politics, and a lot of it has to do with the price of gold. And that's really affecting the price of the Rand. So it's a little bit of a difficult at sometimes currency to trade, okay? I'm not saying that it's not tradable. It is definitely tradable. Over the past 3 weeks, I would say you've had a couple of opportunities, 3 major opportunities to really trade. But altogether, okay, if we look at the currency markets, we're seeing a whole different picture than what we were seeing about 6 months ago. Okay, between 6 months ago And about 5 years ago, we were in a very tight range. I would say since Brexit until about 6 months ago, we were in a very tight range, maybe 600 to 700 pips on the Euro USD, on the GBP USD. It was very, very tight. There wasn't a lot of exciting things happening there. Now, over the past 3 weeks to 4 weeks, we've hit that volatility and then some, okay, in a matter of only 3 weeks. So, you know, a lot of opportunities in trading currencies right now just abound because of what's happening with all the stimulus packages and some of the inflationary issues. Which country is going to be ahead of this situation? Everyone's taking this into consideration.
And then a follow-up question here from Molossi. He wants to know, how much money do you need to trade in foreign currencies? What's the minimum?
Well, okay, so I mean, you know, there's no real answer to answer that because, you know, you're starting a business, okay? It's not like you're going to the casino and you're just going to try out, okay? If you're looking to actually trade and take this seriously, then you're starting a business, okay? That's the way I look at it. That's the way I started with it. Yes, you could open up an account for $250, but for me to tell you that it's going to be anything significant with $250 would be me misinforming you. It needs to be something significant. I would say start out with $1,000 to $2,000 if you're trading currencies. Okay, that's a significant amount, and you could double that. And I've seen clients double that. I had one client come in. He put in $4,000 in his account. He started out with currencies, built his account to $10,000, moved it to commodities, moved it to indices, and the guy brought it up all the way to $84,000.
Wow, I bet you have some who've lost as much. Can you lose more than you put in?
No, that's part of what we do here is that we make sure the clients don't go negative. Okay, that's not a scenario we want you to do. I mean, my approach to trading is really very conservative, very controlled. Okay, you have to really be in a situation where it's a 2-to-1 ratio, where you're looking to make twice of how much you're looking to lose. Okay, there are rules to this. It's not arbitrary. It's not something that you just, you know, let me try it out or beginner's luck. There's a system to trading, okay? And if you really adhere to the system, you could be very successful about it. What's beautiful about this is that you don't need a Harvard degree, okay? Some of the best traders I've ever met in my life were taxi drivers or people who were cutting pizza for a living. And that's the point, okay? There's no filter to it, for good or for bad, okay? But that gives you an opportunity to participate in trading the financial markets, even if you don't have a background of it. And that's what really is beautiful about it. And that's given a lot of people who are, you know, staying at home right now, the opportunity to really focus on alternative income streams like trading the financial markets.
Bitcoin, what is it and how do you get your money out of it? Is it a good trading option?
So Bitcoin is under the umbrella of cryptocurrencies that have been, I think, in circulation since 2011. I would say that's the as earliest that I remember it. It started out at $50. Basically, it's a non-bank, non-central government currency, okay, that is circulating in the markets. Now, we've spoken about several types of cryptocurrencies, and they're gaining popularity, okay? Bitcoin being the most popular out of all of them. It basically trades just like any foreign currency, okay? You could trade it just like you trade any kind of asset. It's been quite a ride for Bitcoin over the past 2 years, 2.5 years, going as high as 20 Bitcoins per dollar, really. So it's 20,000. And I remember when it was trading back in 2011, it was trading at $50 per Bitcoin. So, it exploded in 2017. And since then, it's been in a kind of like an interesting perspective of where it's really trading and really trying to find its character in the new world that we have, because it's not readily available to be used at any groceries. But as we make this transformation, especially now that we've been in lockdown, I think everybody has, transferred themselves. I myself am not carrying any cash or any coins to the best of my ability, just to avoid any kind of surface germs or anything like that. And I think that a lot of people are going to transfer into going into payment solutions from their phones and so on and so forth. It's going to pick up steam. Now, there are a couple of companies that are really trying to pick up the ball, like Facebook and Google, that are going to use these kind of cryptocurrencies, and they're getting a lot of slack for it because it's not regulated by some of the central governments. Basically, it's stateless. So there are some risks, and like anything else in life, right? But ultimately, the market will prevail. Okay, now it is traded on a future exchange, so it is traded on the CME group. Okay, so it is recognized. So it does have some sort of hands-on regulatory body on it, but nothing to make it, go to infinity, or nothing to make it go to zero, just like any other currency. Okay, for all intents and purposes. So it's still finding character at this stage. Okay, it reminds me very much of the internet stocks about 20, 25 years ago.
So would you trade in Bitcoin? Is that an area that you personally would get into?
Yeah, so I've covered it on my daily reviews. There have been a couple of opportunities over the past few weeks, actually. Usually when you're having these massive spikes in the markets, okay, you usually have what we call a V formation, which means it's a one directional and then a correctional move that comes right after it. And then you've got a long period of time we have consolidation, okay, where the market is just really just, trading in a very tight range. And that happens quite often. It happened with gold, since 2012, where gold sold off from 1,800 down to 1,000 and traded between 1,300 and 1,000 for about 4 or 5 years until now it's started to explode again. So, these are cycles the markets will continue to have. There's nothing we could do about it. It's just a natural formation of the markets.
Thank you, Fred. And then here's a question for Arran from Rosemary. She says, please explain the UK tax implications of rental incomes from property in the UK.
Yeah, definitely. The individuals, when you have your first bit of income, each person's got their own income tax threshold, which is currently £12,500. So that's quite a decent amount that you could be earning in property income without paying any UK tax on it. So that's tax free. But you have to sort of consider other, taxes when you're looking at the income, because if you are purchasing it in your own name, a recent change occurred that is called mortgage interest tax relief. In your own name, you can't deduct the interest off of your expenses, so it means you're actually getting taxed on your total revenue of your property. So the easiest thing is to we've got our accountant will set up a company for you. It's £150, and the cost to submit your accounts per year is £450. But what you'll be able to do is then take off all the interest payments. That means you'll get a much larger income, and then once you pay the income out from your company, that's tax free. So you're really only just paying on the income side 20% tax, which is the corporation tax.
Thank you. And then are there extra implications for South Africans on their tax when they bring the rental back to South Africa, or even just when it's reflected in their income tax returns?
Yeah, I don't know so much on the South African tax side of things. I'd have to consult their tax experts. But what the people are generally doing is that they do have a UK double tax treaty with the UK. So, the banks, they would, communicate that back to South Africa. But what some people are doing is putting their children like over 18 years old as directors on their UK company. So although the company owns it, the income is then paid to the children. So they don't, incur the same tax liability, because if you're a high-earning taxpayer in South Africa, you may not want to have that income being declared in your own name. So there's certain ways around which are within the legalities, so, you're not being a tax dodge, breaking any tax rules, you're just using the systems correctly.
Right. Thank you. And then here's a question for Fred from Ryan. And Ryan wants to know, should you invest in the S&P 500 or separate stocks? What's the best way to play that game?
So that's the million-dollar question, right? So, do you diversify, or do you put your eggs all in one basket? I mean, over the years, the answer to that question depends on a lot of factors. It depends on your age gap. It depends on how long you're looking to invest. It depends on what your risk parameters are. The S&P 500 over a 10-year period generally earns 10% per year, okay, which is very reminiscent of something like the real estate market, okay, at least in the United States. Not very familiar with the UK market, although some of the similarities overlap, especially because it's a landlord-friendly environment, okay, which means that landlords generally make money as opposed to somewhere like Germany, where the land it's more of an incentive to rent than to buy. But focusing on the S&P and focusing on stocks, when you're there's benefits and demerits to each one. The benefit of investing in the S&P 500 is you have consistency over a longer period of time, okay, and you're not averse to massive corrections in markets like you would if you were only exposed to a particular stock. Now, at the same time, okay, your upside is limited also, okay, because you're just trading or you're just investing in the S&P 500 and not in some, exotic type of stock like Tesla, for example, which generated over, 600 to 500%, I believe it is. So, there's a benefit and demerit to each one. You have to really calculate your time horizon. You have to calculate your risk aversiveness to it. And for you to be really, on ball, so it also depends how active you want to be in the markets, right? So if you just want to invest and just, close your eyes for 10 years and just, wake up 10 years later, then that's a different strategy as well. So it really depends on the particular person's time horizon and risks.
Thank you. And then here's another question for Arran. Anne wants to know, and maybe you can't specify, can you recommend any companies that do rental management in the UK, preferably a company that would help you to purchase as well as rent? So in other words, give your money to somebody, they find the property, they find the tenants, they take all the hassle off your hands.
Yeah, sure. Well, as our name suggests, one-touch property, we're trying to help people from start to finish. So, we have well-researched investments in some of the major cities where there's good economic growth and capital growth. So we could certainly help her to find the properties. And then each of the developers that we work with has got their own property management team. So they would they've got their own on-site lettings management and property management team. So it is kind of like the one-stop shop, and if they come to us, so if they log on our website, One Touch Investments, we can start having a discussion to see if we can find something suitable.
Okay, so your company is one of them, but there are other companies like that as well, you think?
Yeah, definitely.
Okay, thank you. And then the million-dollar question, Fred, how do you get good exposure to gold? And Arthur says that last week we were hearing a lot about funds giving you exposure through, companies that in turn are gold mining companies. So we had a guest who spoke about the MSCI World Index. But there must be lots of opportunities to invest in gold in various ways, which you could perhaps set out now. Commodities, for example, how do people get started?
So there's several aspects of gold that you could invest or trade, okay? If you're looking to invest, you'd probably be looking for an ETF, it's called, to invest in a traded fund that represents some sort of gold, either commodity or the miners, or anything along the way that is on the trail of gold. And then there's, the physical gold, where you could actually trade, gold. You could buy gold in a store and you could trade it online. So the availability of gold is there. I think in the next 6 months, it's going to be a very rocky ride with gold. Some people are calling a $3,000 target by the end of the year. I called a $2,000 target by the end of the year, and that was 3 months ago. And that we've hit that, okay, we've retraced a little bit below that, but ultimately gold will be in play for the next few years, for sure.
So how do you play that game? How do you, can you give a bit more granular detail about what traders should be looking for so that they can buy at the right time?
Well, it's the old additives of saying, buy low, sell high. Okay, this really, it's a very simple strategy. You know, there are pocket of opportunities where gold explodes, okay, and then it either retraces and consolidates, which it's done over the past 3 weeks. There are definitely, you know, nothing ever just goes up and just stays high, okay. There are multiple times during the day and multiple times during the month that things, you know, fluctuate for traders to get participation in. You know, ultimately, it's using the application of technical analysis in order to, you know, find entry points into gold. But if something is going up, it's going up. Okay, so your entry level is not the most important part, believe it or not. It's where you expect it to go up to. And right now, we're pushing the envelope with it. Okay, there's a lot of activity. Warren Buffett is actually completely empty with all of his equity, all of his shares, all of his stocks are completely empty. And he's transferred money to a couple of countries offshore that are doing bonds. And he's also put money into gold, okay? A lot of money into gold. So, you know, you've got to go where smart money is going. And, you know, in this business, you know, it's not about reinventing the wheel, but many times just, you know, finding that opportunity where other major players are going into.
Thanks. Just on the issue of Warren Buffett going into gold, there's been some comment that he hasn't actually gone into gold, but he's gone into a gold mining company and he's backing a good manager, which is one of his sort of approaches to investing. Do you think what is your view on that? Or do you think he's genuinely backing gold?
So, you know, Warren Buffett has a list, okay, where I call it the checklist of different components each kind of company that he invests in has to match. And that's his strategy over, you know, the 50 years that he's been investing in the markets. And, you know, overall, he's made money, okay? He's been very, very good returns overall. Now, there have been some setbacks in the past, and his strategies are not to invest in the actual commodity per se, but to invest in the chain of developing that commodity. So it's very natural to see Warren Buffett actually to do something like that because it's more in the inclination of something that he calls that I understand. And, you know, for each type of trader or investor, whatever markets you're trading, okay, whether you're in the housing market, whether you're in your commercial real estate or residential real estate, or whether you're trading the financial markets, okay, in the various categories, there's always a strategy and an edge that you develop for yourself of what works, okay? And I'm very much of the type of personality to say, learn as you go along. And, you know, you could do it in property management, you could do it in, you know, it just takes time, longer time when you're doing something with real estate, but, you know, the financial markets are much more instantaneous. So really, ultimately, the strategies are there. You just have to focus about what works and what works for you, and then you could make money over the long term.
Thank you. And then as we start wrapping up the webinar, we've got some questions here about the risks. And Johannes says, is it true that 80% of traders lose all their money?
The numbers, I don't know exact numbers, okay? Unfortunately, the numbers are not in their favor, okay? And like I said before, ultimately, because there's no filtration about who enters the market and how they enter the market, there are a lot of people that do not succeed. And it's not because they're not capable, it's mostly because they haven't seen it through fully, okay? Now, I've been committed to this business for over 20 years. I've had bad years, I've had good years, and I've had better years, okay? But ultimately, I'm committed to the process of developing myself and continuously developing myself into a consistent trader. And I feel that a lot of people who come into it have very false expectations. Those false expectations are met with frustration initially because it's not having to have that instant success as some of the movies or some of the shows that you've seen before and people talking about trading. But it is ultimately one of the most exciting, one of the most diverse, one of the most acceptable ways to garner and to make wealth over a period of time.
And what's the biggest mistake you've ever made, Fred? The one that you regret, that you would advise your children not to make?
Do you want the itemized list?
Just one.
There's many. There really is so many. I mean, probably the biggest mistake I've ever made was that I didn't get involved as big as I wanted to in real estate early on, believe it or not, which is not directly related to trading the financial markets. But ultimately, you take life lessons, and the way we called it is that we were paying our education. Okay, when we lost money in any kind of trade or any kind of business dealings that we did, we call it paying your education. Okay, you go to universities, you pay an education, and that's part of life. Okay. And that's natural, and that's healthy, and that's good. It's a process. Okay, if you don't lose money, you don't learn. Okay, most of the biggest losses that I've had, okay, I've learned and I've gained some of the best education that I could reflect back to. Now, does it hurt? Absolutely, it hurts. Okay, there are times that I look back and I say, what was I thinking? Why didn't I just cut that short? But ultimately, it's a process, and you have to accept that process and learn from that process. And that's how we grow as individuals, as investors, as husbands and wives, as children, as parents. And that's part of it. That's part of the cycle of life that we need to gain for ourselves. And if you don't go through those challenges, you don't learn.
Thanks, Fred. And then, Arran, what are the biggest mistakes that you've made in property, and what mistakes are you seeing when people move offshore? What should they guard against?
Well, if Fred, who's a professional trader, says his biggest mistake was not getting involved in real estate, maybe I should leave it there.
Yeah, but there are obviously mistakes that people can make, because real estate also has its own risks. You can maybe sell too early, or buy the wrong property, or buy at the wrong time. Is there anything that you would advise people to guard against?
Yeah, I think that for myself personally, it was on not getting involved in a deal again. I was waiting for someone else to join me to sort of feel more secure and about making the investment. And the hunch that I had was a correct one. And it was actually the biggest loss was not something that I'd bought and lost money on. It was more something that I didn't take the opportunity. And I think people have got to have a clarity of vision. A lot of people from South Africa, they kind of would go and say to me, okay, fine, I want to invest, but then I want to have a place to live as well. And I think you've got to have a clarity of focus in saying, well, make an investment for the investment purposes. And if you do have the right to live here, or a passport like from ancestral visa or whatever, if it does come to a point where you need to leave South Africa for whatever reason, you don't know where you're going to stay or what you're going to do, so you can sell that property at that stage if that ever happens, and then buy something for yourself. So it's having that clarity of focus, I think.
Thanks. Well, one of my regrets, I think, is not investing in March, when one of our regular commentators, Koki Koiman, said this was the best buying opportunity he's ever seen in 30 years. So I wish I had been trading at that stage.
Definitely.
So yeah. So thank you very much. Yes, Fred?
Just to add, I just said before that it wasn't not that, that real estate wasn't, my biggest. It's just I would have wanted to get bigger in real estate. That's all it is. But I have no regrets whatsoever entering trading the financial markets. That's really, I think that's part of where everybody is some sort of commerce. And at the end of the day, whether you're trading the financial markets or you're in real estate, you're in investments and you're looking to build your portfolio. And you hear some of the same repertoire between whether you're investing in real estate or the financial markets. So, ultimately it's all under the same category of investing.
So in other words, have a balance, Fred, even if you are trading.
Exactly.
Okay, great. Well, that's a great note to end off on. So thank you very much to Fred Razak of CMtrading and Arran Kerkvliet of One Touch Property. And thank you to everybody who joined us today at the webinar. Next week, we've got Craig Gradage, who's an award-winning financial planner, joining us, and probably another person who also specializes in trading. So we'll see you next week, and please do send me your questions and feedback. So thank you very much.
Thanks very much, Jackie. Appreciate it.